Good morning, it's Jeff Christian of CPM Group. It's about 11:30 on July 1st in New York, Eastern Time Zone. Talking today about gold and silver. We have seen a massive sell-off in not only gold and silver, but platinum, palladium, copper prices today. And I guess the question is, was the decline too far too soon? Gold has fallen below $1,800. It's gotten down to, I think, around $1,782 at one point. Silver has broken below $20 for the first time in a long while. Hardly shows up here, but you can see that really it's been above $20 since August of 2020. CPM Group has been saying for some time that we thought that the gold price would be weak over the summer months. We have published in our precious metals advisory in the gold and silver trade recommendations that we deliver to paying clients. They have 1 month and 3 month price expectations in them. And then in other venues, we have been saying for some time that we thought that the price of gold could drop to $1,780 or even $1,750 over the course of June, July, August. It's July 1st, and it got almost to $1,780 already. Silver we thought would hold above $20. It has fallen below $20. Silver has some things going on that make it particularly vulnerable. But as I said, we've also seen platinum, palladium, and copper and other commodities fall sharply. It's really a combination of factors. Our expectation is still that you are likely to see weak gold and silver and platinum and palladium prices over the next 2 months. We're holding to our view that gold could trade as low as $1,750 during this period of time. The fact that silver is already below $20, which was where we thought silver would find a floor, suggests that we may have been too bullish on silver, at least in the near term. In the real near term, the period of time over the next 5 trading days, which is covered by our gold and silver trade recommendations, we have actually issued yesterday, we issued buy orders and prices, as I said, gold's off $25 since then, and silver's off $1. We issued new buy recommendations today at lower prices. We think that the same dynamics are there, plus that we think that from a very short-term perspective, the prices may have fallen too far, too fast today. And we may see a little bit of a recovery next week for a variety of reasons, but then we'll, again, expecting weaker markets over the course of July and August, and stronger prices into the final 4 months of the year and beyond. Today's price decline is interesting because there are so many factors figuring into it. First off, financial markets have been reducing their inflation expectations. We've seen this really for a couple weeks. The year-over-year CPI core inflation figure has been in the last 2 months. We won't know the June CPI until June 13th, but we have seen mainstream economists and even precious metals economists starting to back away from the view that inflation was going to be more persistent than beyond. You're still seeing people saying, oh, we think that headline inflation will be 6.7 or 8% over the next 15 months, 18 months. But more and more you're seeing people who are saying, no, we don't think that's going to happen. And we understand that there are issues in the supply chain and supply of goods and services that continue to be problematic, but they may be less problematic. That said, the longshoremen in the twin ports of Los Angeles and Long Beach, California, which handle about 40% of US imports, are going into labor talks, and their labor practices have been a major factor in the supply chain disruptions in 2021, along with issues with long-haul truck drivers, and a lack of them. So there are still problems there, but we have seen that move toward lower inflation expectations. Yesterday, the PCE Price Index came out for June, and it was 6.3%. That was lower than a lot of people, including the Fed, had been expecting. And the PCE Price Index, we look primarily at the CPI, but the Fed looks at the PCE Price Index. And when the Fed is looking at the PCE Price Index, we all should also look at it too, because we want to know what the Fed is thinking. But the lower PCE figure for June that came out yesterday sent a message and suggested to financial markets that the FOMC may reduce the ramp up in interest rates in its July 26-27 FOMC meeting and in subsequent future meetings. So if the Fed thinks that inflation actually is cooling off, and that even the smallish and low increase in interest rates that we've seen already are having some effect in controlling inflation and the reduction of the Fed's balance sheet sucking money out of the economy. But there are other issues which I've talked about in the past on the supply side, which actually don't respond to higher interest rates, and on the fiscal stimulus side from the administration and Congress, which also don't respond to the Fed policies, unfortunately. So the fact that the PCE came out yesterday sent this wave through financial markets that yes, the Fed actually may be more accommodating in its late July meeting. And maybe they don't raise interest rates 75 basis points, maybe they raise them 50 basis points or even less, depending on where it's going. Another factor is the financial markets have we've seen their concerns over a imminent recession receding. And even some of the most bearish macroeconomists that you see in mainstream media and on the internet have been saying, well, maybe we're not in a recession now, and maybe we won't be in a recession until late 2023 or 2024, which, you know, CPM Group has been saying we expected a recession in 2024, 2025 for several years now. And so you're seeing recession concerns recede. That's taken some of the oomph out of investment demand and made gold and silver somewhat less compelling. We've seen lower nominal interest rates, slightly lower nominal interest rates, but with the fact that inflation expectations are falling faster than nominal rates, if you base your real interest rate calculations off of inflation expectations as opposed to inflation, you're seeing higher real rates projected by the financial markets going forward. The dollar has been stronger. No surprise there to us, but you know, we do know that there are a lot of people who have been expecting the dollar to collapse any day for the last half century, and they're going to just have to continue to wait a little bit more. We also saw technical breakouts on the prices to the downside. You know, gold had been trading between, say, 1808 and 1850 since May, since the middle of May, and it broke below 1808 yesterday. We should have taken that as a sell sign instead of a buy sign. Instead, we said, hey, it's at the bottom of the range. It's a good time to buy. Silver also has been breaking out of its range and has been more forceful on the breakout. A little bit more spongy, but the US government has been gaining some power in international politics with the meetings of the G7 and NATO this week and the prosecution of the Russian invasion of Ukraine and other factors. The US has actually gained some respect, if not respect, power on the international platform, political platform. And that also has reduced the compelling impulse to buy gold and silver. Financial markets are realizing that the propaganda, that a lot of the discussion about a non-Western political and economic bloc that Russia and China have discussed is pretty much propaganda. silver and gold investors have been hearing mea culpa from various promoters. You know, you're hearing people who for 15, 18 months, i.e. their entire career as silver promoters, have been saying that the COMEX would run out of silver, that they could squeeze and drain all of the silver from the COMEX. And now they're saying, okay, yeah, COMEX inventories are half of what they were 18 months ago, but yes, they're 3.5 times higher than where they were in the middle of 2019. And they're more than double what they were for years before they started rising in the second half of 2019. So you're hearing people say, yeah, okay, we were wrong. We couldn't squeeze the market. And the COMEX isn't running out of silver. And we clearly maybe didn't quite understand how COMEX works. And you're hearing other people say, okay, maybe we were a little premature, talking about $50 or $70 or $100 or $700 silver, as we've been premature all of our careers, whether they're 18 months or what's that one guy who's been around since about 2005. And then there are other people that I've known talking about a $700 gold, silver, and $10,000 gold since 1982, after it had fallen from $850 to $250 an ounce. So you're seeing some of the undue bullishness from the promoters being qualified by them, I guess because they realize that people have lost a lot of money in the last 18 months listening to them, and they're losing their credibility. And when you lose your credibility, you lose your income. Another factor was the end of the role of the COMEX silver futures contracts open interest. You know, at the beginning of this week, we probably had more than 100 million ounces of open interest remaining in the COMEX silver contract. By yesterday, we were down to 15 million ounces. So the pressure to roll over was taken off of the market. And finally, there's what I would call the 4th of July effect. A lot of investors didn't want to go into a 3-day weekend in the United States long: gold, silver, platinum, palladium, copper. They saw all of these other factors. They saw the writing on the wall. They heard the train coming down the tracks. And they said, okay, the United States is closed on Monday, but London's open. I don't think I want to be long in that kind of environment. So that's about 11 or 12 different things that we think all combined to cause a lot of people to lighten up their long positions across metals today. And that's why we think the prices have fallen. Given that, we still think that the markets are facing weakness in the next 2 months, but you could see some short-term recovery next week. And longer term, we're still positive on gold and silver because a lot of big old problems still exist and they're not being resolved, even if things look a little bit better right now. That's about all we have for now. If you're in the United States, have a good holiday weekend. If you're in Canada, I hope you had a good holiday weekend because you're off today and you're hopefully not spending Canada Day listening to videos like this. And if you're in the rest of the world, I hope you have a good weekend. Enjoy yourselves, and we'll be talking to you next week.